You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always. And this week, for the first time in a few months, we're going to get an update on the industrial market in Western Australia with my man Wayne Chorley, industrial specialist at Realmark. Mate, thanks for coming in again. It's always such a pleasure having a chat with you.
Thank you, Trent, and thank you for having me.
Isn't this time such a fantastically strange period for the industrial market, for yourself as an agent? You were saying to me off air that this is the longest sustained growth phase or even just positive phase in the industrial market you've experienced in your career. And it's not been a short career, has it?
That's correct. Yeah, I've been doing it for many years. It is the most lengthy sustained period of growth we've had. We had a big boom back in 2006 and 2008. That was fairly short-lived, and it fell off a cliff in 2008. We then went into a prolonged downturn, and for about 12 years, which is equivalent of about 2 property cycles. It bumped along the bottom. There was very little rental growth. Capital growth was very limited. Incentives were through the roof. Tenant demand was sporadic at best. That all changed, funnily enough, with the pandemic. The pandemic was a paradigm shift in the industrial market, not just in Perth, but worldwide. I think there was a realisation that supply chains were inadequate. Companies needed to develop better supply chains and hold more stock in their warehouses.
More secure supply chains.
So that meant building more warehouses and building bigger warehouses.
And I guess that's something that, as you said, for many, many years hasn't been a part of the development spectrum in Western Australia. Not many companies building warehouses, not many developers funding the build of warehouses, not many land developers providing the supply to build on as well, right? And it's really come down to Development WA and 1 or 2 private industrial estates since COVID bear the brunt of it on their shoulders, right? And we're really at a bit of a coalface at the moment, where after a few years of any cycle, you would expect to see supply starting to meet demand again and prices starting to balance out, yield starting to soften. But just like in the residential market, it sounds like what you're telling me again, it is a supply-driven cycle where just the practical material fundamentals of providing that supply, not from incentive, but just simply from availability, from capacity, what continue to drive this moving forward.
Pre the pandemic, a lot of larger firms, larger companies, supply and logistics companies, held their stock in Melbourne or Sydney and air freighted across on demand, basically. But since COVID, with the problems we experienced with supply of products during that period and afterwards, there's been a paradigm shift in the market, and there's more warehousing, more companies coming into Perth to establish big warehouse holdings in Perth.
Let's break it down a little bit. It's easy to generalise and say, hey, the industrial market's doing well, rents are up and availability is low. But I'm sure this is segmented like any market. Is it the small stuff? Is it the big stuff? Paint a picture for us about where the pressure is and at what degree.
Basically, we're running out of land in Perth. The small lot subdivision, all that land has been sold. As a consequence, the supply of smaller units, smaller strata titled units and warehouse units in the 1,000 to 3,000 square metre range, that supply is going to be extremely limited in the next 12, 18 months.
Is it already extremely limited?
It is. It'll continue to be. There's no new supply coming on, so rents in that sector of the market will continue to run rampant as they have done for the past 12, 24 months.
Where would you characterise rents to be across a couple of the centres in Perth right now for that product?
It's a moving target. The newer 8-9 metre internal clearance warehouses, it's probably north of $140 a square metre now. The clubhouse leader for warehouse rents is a recent deal that was done in Canning Vale at $180 a square metre. There's a pre-lease deal done for a brand new workshop, 4,500 square metres, with 2 5-tonne cranes, $210 a square metre. That's a new record for Perth in terms of industrial rents, and it is almost like an office rent or a retail rent.
Well, you put some context towards it. There are many, I'd say the majority of C-grade offices in Perth that are far less than $200 a square metre, and that's with all the services and cladding and internals. A warehouse is a concrete box with some steel trusses, right?
There's just no workshop space available for lease in Perth or for sale.
And if we can tie this to the residential market and other services, we think about service inflation right now, that will be limiting the capacity of the market to meet demand in just the functional servicing space. If you don't have a warehouse, you can't fix cars, you can't build things, you can't engineer things.
Yep.
This is all flowing into the inflation of our market, right? Just not having somewhere to do your job.
It'll certainly limit economic growth if that imbalance is not corrected. I've got a client who's got a workshop with 2 5-ton cranes with a lease expiring later this year. My advice to him was to lease it by tender. That's the strength of the market for workshops at the moment. And finding out about this most recent deal only makes my method of disposing of it or leasing it firmer in my belief that that's the way to go.
So where are yields sitting in this smaller space at the moment? I remember last time we spoke last year, you were quite bullish that yields would still cap out around the low 6 mark, which is still a phenomenal yield in the industrial space. It had been in the mid-5s when interest rates were lower. Yep. We were forecasting, obviously, rates would increase. They have increased, obviously, by 4% since we first spoke. Yet the yield hasn't really moved that much, has it?
Industrial is considered to be a safe haven now by investors, both locally and interstate. We have sold a number of properties recently, investment properties, and in each case, the buyer has come from the East Coast. The yields have cracked 6%, high 5s for this sort of space now. And what we're seeing is that long-held belief that the longer the lease, the more secure the property and the lower the yield. That's really being tested at the moment because the strength of the owner-occupiers who want to buy a property and get out of the rental cycle, they're quite prepared to sit out an 18-month lease and then move in. And as a consequence, we're seeing virtually no difference between a yield for an 18-month lease and a 5-year lease, which is really a new phenomenon in Perth industrial.
Well, I think you've never seen that dynamic before where owner-occupiers have had nowhere to go but to wait for the incumbent tenant to get out of the way so they can run their business.
Yep.
Never has that been the case before.
Yep. And that competition for investors is driving the yields down.
It is phenomenal thinking that in the industrial space, still a couple of years on, post-COVID conversations is this resilient. And it just shows we aren't solving the problems. Yields and rents are only going in this direction because we aren't solving the supply problems. The demand's clearly there, but the demand's not outrageously different to what it was years ago. Obviously, it's step change, but what's really the issue here, just like in the residential market, is the ability for the supply side to respond to that. In normal free market, supply should always be incentivized to and facilitated to meet demand.
Yep.
And that seems to be the same story that we're seeing. It's capacity that is the issue in this country. It's really strange, especially when we think about land. We know that land is not something that's in short supply in this country, but serviced, zoned land that Development WA can develop, that seems to be where the ball is being dropped. And we speak about it in the residential space, all the policy issues around planning. We never really talk too much about forward planning in the industrial space to support the residential market, do we?
Correct. And it's the time frame in getting that land to the market and getting it to a saleable condition. Getting through the red tape is an obstacle that limits the supply as well. There has been new supply come on in the industrial market.
Is that Orion Park in Southern River as an example?
Those sorts of areas. But all that supply, that new supply has been at the big end of the market, 10,000 square metres, 20,000 square metres.
And what sort of businesses would be using that?
That's all transport and logistics. Getting back to that point I made earlier about the paradigm shift in the market and transport and logistics companies having to have a bigger presence in Perth because of the previous supply chain problems. But all that supply is at the big end of the market, and I think that will create some vacancy from the backfill when tenants move out, because some of that product has been built on spec without having a pre-commitment from a tenant.
Just a build and hope.
Just built. That's the strength of the market, and most of that space has been or will be let before its completion. So that big end of the market, there will be, I think, maybe a softening of rents. I think they'll maybe level off, and you might even see a bit of incentive come into the market with that 5,000 square metres and above. But at that lower end, that 1,000 to 3,000 square metre mark warehouse, that's where the supply imbalance will still exist, and we'll see some continued rental growth in that area of the market.
Why do you think the land developers in the industrial space, and again, a lot of this is Dev WA, aren't providing for the smaller packets of land with the smaller warehouses on there?
Well, I think it's just a question of getting the land to the market in a timely fashion. There's been incredible demand for industrial land. Development WA have sold out all their estates. They are looking for more land opportunities now. But there's always a catch-up period. It'll be very hard to get a perfect balance At the moment, we've got an imbalance where there's no land being developed for smaller units. There'll be a correction, and in maybe 3, 4, 5 years' time, we might have too much land. It's very hard to get the balance absolutely correct and read the market.
Is that the time frame you're setting right now? Is you don't think that there's really much of a light at the end of the tunnel until we get to that 3-4 year time frame? So in the short to medium term, there really is no practical solutions being offered here, and therefore the only way things can go are compressed yields and sustainable rental growth.
Correct. Yep, that's what I see.
So you've touched on a couple of the spaces where demand's coming from. Local owner-occupiers being small businesses who want to run a business, but also East Coast investors. Why is that pressure coming? Are they just looking at it as a leased investment to make some money and park it in a safer area? Why aren't they buying in Sydney and Melbourne where they would have much more context about their markets?
Well, they're chasing return. The returns here are better than they're getting on the East Coast.
So the yield is higher?
Probably almost a percentage point higher.
Why?
In some cases. There's probably more competition for assets on the East Coast. More buyers. They see value here. That's the main reason they're picking over the market so closely. We look at $210 a square metre as an industrial rent and we say, wow, that's a new record. They look at $210 a square metre and think, well, that's still cheap.
What are they paying in Sydney for a similar thing?
Yes, they're talking well in the mid-200s in some locations for warehouse rents. They see value here, and I think that'll continue to flow on.
And when I think about it, I have to ask the question, if you've got the same warehousing, online shopping style warehouse in Perth versus Sydney, meeting the same type of buyer, the same demand, why is it that a Sydney warehouse nominally has a yield that's 20%, 30% lower than one in Perth? Are we deemed that much less stable, that much more risky over in here? And clearly East Coast investors go, well, no, Perth's just as strong a market in terms of its consumer sentiment and its need for warehousing of product. Retail product is generally what we're warehousing here, as the East Coast is. I see value. I'm going to buy at a 6% yield rather than a 5% yield because the service is the same, the market's the same, and there's a bias to the East Coast, I believe.
You're right. I think there has been a perception, and it probably still is, that there's more risk associated with an asset in Perth as opposed to Sydney or Melbourne and Brisbane. You know, I think it's a perception that is probably ill-founded. It may have been the case when there was probably not as much depth to the Perth market as there is now. There's certainly good buying opportunities out there for locals, East Coast buyers and owner-occupiers as well.
When I think forward practically about industries that are going to need warehousing in that industrial space in the future, I think to the AUKUS agreement. I think about the huge change that's going to happen around Henderson with many businesses, marine supporting businesses being out there. Am I onto something there in terms of the growing need that there will be in that space for more industrial warehousing square meterage?
Down that neck of the woods, you're probably looking at more workshop space. That's what's required. That's where the real shortage is in WA, in Perth, particularly in areas like Henderson and Kwinana, that heavier industrial shipbuilding areas. We need workshops with heavy-duty gantry cranes. That's the reason that these sort of rents of $200 plus are being achieved at the moment.
Because they just aren't available.
Correct.
And I think that's some forward planning the government's going to have to provide there. There certainly is a bit of land down around there, but not serviced and zoned for industrial to the extent it probably will need to be over the next decade. And I see an opportunity there to control as many assets as possible down there that can facilitate what will need to be the fabrication, engineering, manufacturing of marine products in that space, in an area that historically I think has been probably valued a little lower than those closer to the airport, for example.
Correct. Yep. No, it's certainly catching up, and we do need some more land, more stock in a timely fashion.
We run podcasts like this so that the listenership can understand where the market is, but also for the opportunism of saying, well, maybe I'll invest into an asset class similar to this. One thing I think is limiting about the industrial market is there just doesn't seem to be much on the market to buy. Certainly no, as you said, industrial land or older industrial facilities that are at land value that someone could go and buy, knock down and redevelop. Do you see that same reality? Could you go on realcommercial.com at the moment and pick out 3 or 4 sites that you could see opportunity in right now?
The short answer is no. The stock levels are very, very tight in Perth. Perth's always been a tight market for quality stock. It's not out of the ordinary to list a property, a nice little investment property in that $2.5 to $4 million price point and get over 100 inquiries.
Wow.
Because of the demand, we're offering properties for sale by what we call a set date sale or an offers invited campaign. We're getting multiple offers, probably 5, 6 offers per property, and giving the owner the opportunity to select the best and strongest offer.
And currently, who ends up being the winner right now? Is it the owner-occupier or is it the East Coast investor?
50-50. East Coast investors have been very, very active, but it's the owner-occupier that has pushed the prices up because of the interest in sitting out the lease.
I think that's interesting. That's nearly reversed to the residential market, where it's the East Coast investor that moved first and was most bullish and most desperate to get into the Perth market, pushing the price up for the owner-occupier. One segment we're missing of buyers here is the WA investor. Where is the WA investor in the industrial market?
Very active, but they're just being pipped at the post at the moment by the East Coasters, who are prepared to accept a lower yield than the locals are. Locals are sort of sitting at 6, 6.5. The East Coasters are high 5s to low 6s.
Story of our life, I think. And look, and that's not only in the industrial space, but also in the general commercial space. When we think about childcare centres, it is often the East Coast buyer right now that is happy to buy at a lower yield than the West Australian investor as well. And it just shows there is a pretense at the moment on where value is between WA money and East Coast money. I think that's an opportunity for anyone who owns these assets to make sure, if you are taking it to market, make sure it is a national campaign, right?
Correct. Yep.
Wayne, let's wrap it up with a quick crystal ball on rents and yield for the next 12 to 18 months. I know we already spoke about there not being many solutions on the supply side. Given that, where do you see rents and yield sitting next time we chat?
Look, over the next 12, 18 months, I see that owner-occupiers will continue to scramble to buy warehouse units, particularly strata title, the smaller strata title units. And I believe that we'll see some new record set in terms of the rate per square metre that's paid for the smaller stratas. There will be a shortage of warehouse space in that 1,000 to 3,000 square metre size range, and I see rents in that category probably increasing, I believe, by as much as 20% over the next 12, 18 months. And there is an absolute shortage of workshop space with gantry cranes. I can see rents probably going up in that sector by probably 30% over the same time frame. As I mentioned earlier, there's a bit more stock coming on in the 5,000 square metres and above category, and I think that there'll be some easing rents in that sector. The shortage of industrial land will continue to be a problem, and that will in turn underpin the industrial property prices. I can see the investor demand, both local and East Coast, remaining very strong and continuing on for the next 12 months at least.
So what you're saying there, for everyone who's maybe not too savvy with the commercial valuation space, is that as long as yields stay the same, you expect the value of industrial properties in the warehouse space and workshop space to be up between 20 and 30% over the next 18 months.
In that 1,000 to 3,000 square metre size, yep.
And yields will probably still stick around the same
I think
space.
they'll hold, yep.
Well, there it is. There's some serious value growth opportunities there for anyone who has a new opportunity to buy an asset that maybe is coming to the end of a lease or doesn't have a lease, to expect to be able to release it at that new rent record that I'm sure, Wayne, you'll be able to help them with. And straight away, unlike with residential property, with commercial property, you've just uplifted that value by 30% overnight. Sell it the next day if you wanted to. Yep. I'm sure there are people out there doing that. Wayne, Chorley, Real Mark, thank you very much for coming in, mate. It's always a pleasure to have you chat about industrial, and it's so enlightening to understand the dynamics of a market slightly different to ours in the residential space.
Thank you, Trent. Thanks for having me.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!